Hi friends, welcome to SNCA Study Club, a platform for CA final students. So my dears, here we are moving towards the 7th question. Your client is contemplating taking over a manufacturing concern and desires that in the course of the due diligence review, you should look specifically for any hidden liabilities and the overvaluation of asset or overvalued asset. State in brief the major areas you would examine for the above. So here one, that is our client, that is investigating accountant client, is going to purchase or taking over of a manufacturing concern, and they have to know about any hidden liabilities or overvalued asset is there. So the investigation is mainly with respect of identification of that overvalued asset and the hidden liabilities. So what should be the responsibility of investigating accountant with respect of this? We are moving towards this question. Okay, so here he is making what? A due diligence review. We know that what is meant by this due diligence and what is the purpose of due diligence. Why due diligence is used, or which are the situations where the concept of due diligence is used. Due diligence refers to a term which is mainly used in the situations of corporate restructuring. Corporate restructuring, right friends? So due diligence refers to, or it is a term that is oftenly used in relation to corporate restructuring, that is where one entity is going to purchase other, etc. So the main purpose of, what is the main purpose of due diligence? To assess the purchaser or investor and determining whether to make investment in the said concern or whether to purchase the said concern will be profitable or feasible. Plus it also facilitates them to understand the strength, weakness of the business in which they are going to make investment, strength, weakness of the business in which they are going to make investment, and as well as the key strategies which has been followed by the said entity, their market share, etc. So we have already studied what is meaning of due diligence. The main purpose of due diligence is to assess the purchaser or investor to find out all reasonably can about what the business in which they are going to make investment, whether it is feasible or not. So we can say that due diligence refers to a pervasive concept, right? It is a pervasive concept. Sorry, not concept, exercise. Pervasive exercise. For what? To review several aspects. Review, which are the area? Legal matters, information system, financial matters, commercial matters, taxation, environmental. We have detailedly gone through it. I will again explain you. That is, due diligence refers to a pervasive concept or pervasive exercise to review the entity's compliance with these factors or the entity's operation with respect of these. That is, whether they are complying with the laws and regulation, information system. That is, whether the information system of the said concern is providing right information at the right time. So the main concept or the main purpose of due diligence is to determine whether to making investment in the target company will be feasible by analyzing the environmental related matters, legal related matters, information system, statutory compliance, commercial, financial, taxation, etc. So first of all, while answering to this question, you should give what? An intro about due diligence, the meaning of due diligence. It is a pervasive exercise. Then this one. Then what is the meaning of due diligence? Due diligence is a term which is used in corporate restructuring. The purpose of due diligence is to assess the investor, to find out all reasonably can about what? The business in which they are going to make investment. That is, it will mainly facilitate the investor or purchaser to determine whether it will be feasible to make investment in the target company or to acquire the target company. So in the given question, the due diligence should be conducted, or due diligence with respect to overvalued asset and what? Hidden liability. So what should be the responsibility of the investigating accountant with respect of this? First, you should give this intro. Next we are going to discuss the matters with respect of what? Hidden liability and overvalued asset. So investigator, that is investigating accountant with respect of what? Hidden liability. What should be done? He should pay attention to following aspects. First of all, I have a question. Whether these hidden liabilities overvaluation asset will affect the financial statement, financial position, financial result? Yes, it will. That is, hidden liabilities and overvalued asset will affect the financial statement. But it is not able to understand what is hidden liability from the books of accounts. It may not be possible. That is, it is apparent from what? Books of accounts. It is, we can't easily identify or determine what hidden liability and overvaluation of asset, etc. So investigating accountant should give attention towards these aspects. That is, if these concerned organization providing any of the following area information about the following area, we can assume that what? Hidden liability is existing. This is about what? Evaluation of hidden liability, determining or assessing whether hidden liability existing in the books of accounts or financial statement. First of all, determine any show cause notice has been received. Company may receive some what? Show cause notice, but what has happened actually? The company has not, that is, plus the show cause notice is not matured. Company received show cause notice. This is the company. They received the show cause notice, but this show cause notice is not matured. So because of that, that is, it is not matured. Because of that, the company has not disclosed what? Existence or receipt of such a show cause notice. This is an indication of what? Hidden liability. Right, friends? Then letter of comfort. Actually, letter of comfort is not similar to guarantee which has been provided by the company, but it is what? Letter of comfort. That is, company may have given letter of comfort with the bank, plus they have not disclosed the same. This is not what? Guarantee. So letter of comfort which has been provided by the company, which is not disclosed in the books of accounts. Then subsidiary sale indemnifying. That is, suppose this is the company having subsidiary 1, subsidiary 2. Company is making the sale of subsidiary 1. Plus they also agree to indemnify all the liabilities of subsidiary 1. So it is creating a liability on the company. That is, after making the sale of subsidiary, they are also agreed to indemnify all the liability of the subsidiary before that is, which has been occurred to the subsidiary before the sale or before making such a transfer. It will be also form what? A liability to the company. This may not be disclosed in the books of accounts or financial statement. This is also give a rise to hidden liability. Then product related liability. What is mean by this? They are providing goods actually which is not having any warranty, but they are telling that this product is having what? Warranty. Suppose the company or the concerned entity was intended to make the sale by 3rd September. But they not made the sale on 3rd September, they made on 10th August. So they are making liquidated damages on late delivery. Product return. This is also from what? Hidden liability. Then labor dispute, employee benefits which is not paid, the same has not disclosed in the books. Tax liability. Company failed to make the payment of tax. Pending sales tax assessment. This can be analyzed or obtained, or this information with respect of this can be obtained to the investigating accountant by making what? A detailed analysis, all the related records, papers, etc. That is, it is not possible to obtain this kind of information only from the books of accounts and financial statement. Right, friends? Then pending final assessment of custom duty. This is also indicate that hidden liability is existing. Buyback. That is, company has agreed to buy back their share at a stated price. Future lease liability. Third party claims. These are all what? Indication of hidden liability. So investigating accountant, where he is conducting a due diligence review, should give attention to hidden liability and as well as overvalued asset. First of all, you should indicate what is meaning of hidden liability. Meaning of due diligence, its purpose, and when the due diligence review is required, then you should indicate what is the meaning of hidden liability. Indicators of hidden liability. These are the indicators of hidden liability. Now we are moving towards what? Overvaluation of asset. Examples or the indicators that is giving, the factors that giving indication that there is existing what? Overvaluation of asset. Then the next responsibility of the investigating accountant is to determine whether there is having what, an overvalued asset. So these are the indication or what the investigating accountant should focus on these following aspects. First of all, obsolete and non-moving inventory, whether there is having what, obsolete, non-moving or non-moving inventory. This is giving an indication, or because of that there is exists a chance of overvaluation of what, inventory. Then determine obsolete and non-moving plant and machinery and spare parts, that is which is not giving what, any benefit, which is already no, there is not having any what benefit or future economic benefit from these plant and machinery and spare parts, but the same has been provided in the financial statement. So these are also giving what, overvaluation of the plant and machinery, or this may affect what, financial position, and as well as what, the profit and loss account by providing depreciation. So investigating accountant should also give attention towards whether these books of account has provided any plant and machinery or what, spare parts in the books, in the balance sheet and financial statement, which is obsolete. Then asset which is subject to litigation. This is also an indication of overvaluation of asset. Intangible asset having no value. Then inventory investment carrying a low realizable value. These are indication of what, overvaluation of asset. So as for question 7, you should first indicate what is the meaning of due diligence review. Meaning. Thereafter, the main objective or purpose of due diligence review. Then responsibility of investigating accountant with respect of what, hidden liability and overvaluation of asset. Hidden liability we have already discussed. Investigating accountant should determine whether there exist any indicators of hidden liability and indicators of overvaluation of asset. So this is the answer of question number 7. Moving towards next question.